What happens when an entire province builds its economic future on the assumption that housing demand will never stop growing, and then suddenly, almost overnight, that demand evaporates into thin air? Ontario is finding out right now, and let me tell you, what is happening across this province is something that nobody in government wanted to admit was possible. Officials who spent years telling Canadians that prices would keep climbing forever are now scrambling to explain why condos are sitting empty, why pre-construction projects are being cancelled left and right, and why the investors who once flooded the market have completely disappeared. This is a story about hubris, bad policy, and a reckoning that has been years in the making. And if you want to understand what is really happening in Canadian real estate, you need to hear this. Before we dive in, if you are not subscribed to this channel yet, now is the time to hit that subscribe button and turn on notifications, because we cover stories like this every single week, breaking down the real economic forces shaping Canada and helping you understand what these changes mean for your future. Let us start with what is actually happening on the ground, because the statistics coming out of Ontario right now are absolutely staggering. In the Greater Toronto Area alone, condo sales have collapsed to levels not seen in decades. We are talking about a drop of over 40% compared to where we were just a few years ago. Listings are piling up faster than buyers can absorb them, and the inventory of unsold units has exploded to record highs. In some neighborhoods, there are now 10 times as many condos available for sale as there are buyers actively looking to purchase. That is not a slowdown, that is a market in free fall. And here is the thing that really gets me about this whole situation. For years, Ontario officials told everyone that the housing crisis was entirely about supply. They said we just needed to build more units, approve more developments, cut through the red tape, and everything would work itself out. Prices were high because there was not enough housing, they said. So the province went on a building spree. Cranes dominated the Toronto skyline. Pre-construction sales offices popped up on every corner. Developers borrowed billions of dollars to put up towers that would supposedly be filled with eager buyers the moment they were completed. And now those towers are opening to ghost town conditions. Units that were pre-sold years ago are being walked away from. Buyers who put down deposits are forfeiting that money rather than closing on properties that are now worth less than what they agreed to pay. The scale of the cancellations happening right now is unprecedented. In just the past year, over 20,000 pre-construction condo units across the Greater Toronto Area have been cancelled or delayed indefinitely. These are not small projects. We are talking about major developments, some with hundreds of units, that were supposed to be the future of housing in Ontario. The developers behind these projects are looking at the numbers and realizing that there is no way to make them work. Construction costs have skyrocketed. Interest rates have made financing incredibly expensive. And most importantly, there are simply not enough buyers willing to pay the prices needed to make these projects profitable. So they are pulling the plug. Now, you might be wondering, how did we get here? How did a province that everyone said had unlimited housing demand suddenly find itself with more supply than it knows what to do with? The answer is complicated, but it comes down to a few key factors that provincial officials either ignored or completely misunderstood. The first and most obvious factor is immigration policy. For years, Canada ran one of the most aggressive immigration programs in the developed world. We were bringing in over 400,000 permanent residents per year, plus hundreds of thousands more on temporary visas, study permits, and work permits. At its peak, Canada was adding well over 1 million people to its population annually. And where did most of those people go? Ontario, and specifically the Greater Toronto Area. This massive population growth created the illusion of endless demand. Housing prices kept climbing because there were always more people arriving who needed somewhere to live. Investors poured into the market because they believed this trend would continue forever. But then the federal government changed course. Faced with mounting public pressure over housing affordability, strained public services, and infrastructure that could not keep up with population growth, Ottawa announced dramatic cuts to immigration targets. Temporary resident numbers are being slashed. International student permits have been capped, and the overall pace of population growth is expected to slow dramatically over the next few years. Some projections suggest that Canada could actually see population decline in certain years as temporary residents leave and new arrivals slow to a trickle. This policy shift has pulled the rug out from under Ontario's housing market. All those condos that were built or planned based on the assumption of endless population growth suddenly have no one to buy them. All those investors who were counting on renting their units to newcomers are finding that tenants are harder and harder to find. Vacancy rates, which were near zero just a couple of years ago, are now climbing in many parts of the province. And landlords who overpaid for investment properties are discovering that they cannot charge enough rent to cover their mortgage payments. The second major factor is the investor exodus. For over a decade, the condo market in Ontario was driven not by people looking for homes, but by investors looking for returns. Some estimates suggest that as much as 50% of new condo units in the Greater Toronto Area were purchased by investors rather than end users. These investors ranged from small-time landlords buying a single unit to large institutional players snapping up entire floors of buildings before they were even constructed. The whole market became dependent on this investor activity. But investors are rational actors. They buy when they think they will make money, and they sell or stay away when they think they will lose money. Right now, the math simply does not work for condo investing in Ontario. Purchase prices remain elevated despite recent declines. Mortgage rates are at their highest levels in over 2 decades. Condo fees and property taxes keep climbing. Insurance costs have exploded, and rents, while still high by historical standards, are not keeping pace with all these rising expenses. Many investor-owned condos are now cash flow negative, meaning the owner loses money every single month just to hold onto the property. When investors start losing money, they stop buying. And when enough of them stop buying at the same time, the market loses its primary source of demand. That is exactly what has happened in Ontario. The investor pool has dried up almost completely. Pre-construction sales, which were once dominated by investors hoping to flip units before completion, have ground to a halt. Nobody wants to buy something today that will not be finished for 5 years when they have no idea what the market will look like by then. The uncertainty has paralyzed the entire sector. The third factor is the broader economic situation facing Ontarians. Even before the housing market started to crack, affordability was already stretched to the breaking point. The average household in the Greater Toronto Area was spending more than 60% of its income on housing costs. That is far above the 30% threshold that economists consider sustainable. People were taking on massive amounts of debt just to get into the market, betting that rising prices would bail them out over time. But now that prices have stopped rising, that bet is no longer paying off. At the same time, the cost of living has exploded across the board. Groceries, utilities, transportation, childcare, everything costs more than it did a few years ago. Wage growth has not kept pace, and many Ontarians are simply tapped out. They do not have the savings for a down payment. They cannot qualify for a mortgage at current rates. And even if they could, they are not sure they want to take on that kind of financial risk in an uncertain economy. The pool of first-time buyers who were supposed to absorb all this new supply has shrunk dramatically. What makes this situation even more frustrating is how predictable it was. Plenty of economists and housing analysts warned that Ontario was building too many investor-oriented condos and not enough family-sized housing. They pointed out that the market had become dangerously dependent on population growth rates that might not continue. They cautioned that when interest rates eventually rose, the entire house of cards could come tumbling down. But provincial officials did not want to hear it. They were too busy celebrating record housing starts and congratulating themselves on cutting red tape. They confused activity with progress and construction with solutions. Now the bill is coming due, and nobody knows how to pay it. Developers are in serious financial trouble. Many borrowed heavily to acquire land and begin construction on projects that are no longer viable. Some are facing bankruptcy. Others are trying to renegotiate with lenders or find new partners to bail them out. The construction industry, which employs hundreds of thousands of Ontarians, is seeing layoffs and project cancellations. Suppliers and tradespeople who thought they had years of work lined up are suddenly scrambling for new opportunities. The ripple effects extend far beyond the construction industry. When housing wealth evaporates, consumer spending tends to follow. People who thought they were sitting on hundreds of thousands of dollars of home equity are now watching that paper wealth disappear. They become more cautious about spending. They pull back on discretionary purchases. They delay major life decisions. This has a chilling effect on the entire economy. Municipal governments are also feeling the pain. Development charges and fees from new construction have become a major source of revenue for cities across Ontario. When development slows, so does that revenue stream. This comes at a time when municipalities are already struggling to fund basic services and maintain aging infrastructure. The financial squeeze is only going to get worse in the years ahead. And here is where it gets really interesting from a policy perspective. Provincial officials are now stuck in a terrible bind. They spent years pushing for more housing supply, and they got it. But now that demand has collapsed. All that supply is just sitting there. They cannot force people to buy condos they do not want or cannot afford. They cannot magically create buyers out of thin air. And they certainly cannot admit that maybe, just maybe, their entire approach to the housing crisis was flawed from the beginning. Some voices are now calling for the government to intervene directly, perhaps by purchasing unsold units and converting them to affordable housing, or by providing emergency support to struggling developers. But any such intervention would be enormously expensive and politically risky. Taxpayers are not exactly thrilled about the idea of bailing out developers and investors who made bad bets on the housing market, and there are serious questions about whether the government has the competence to manage such an intervention effectively. Others are suggesting that we simply need to wait for the market to correct itself. Prices will eventually fall to levels where buyers return. Developers who cannot make their projects work will go bankrupt, and their assets will be picked up by others who can make the numbers work. It will be painful, but it will be a necessary adjustment after years of unsustainable growth. The problem with this approach is that nobody knows how long the adjustment will take or how much damage will be done in the meantime. Housing markets do not correct overnight. The last major housing correction in Ontario, back in the early 1990s, took nearly a decade to fully play out. Prices peaked in 1989 and did not return to those levels until 1999. A lot of people got hurt during those years. A lot of dreams were shattered, and that correction happened during a time of much lower debt levels and more affordable starting prices. Today's situation could be even more protracted and painful. What really concerns me about all of this is the human cost that we are not talking about enough. Behind every statistic about unsold condos and canceled projects are real people whose lives are being upended. Young couples who saved for years to buy their first home, only to watch its value decline after they moved in. Construction workers who were counting on steady employment and are now facing layoffs. Small landlords who invested their retirement savings into rental properties that are now underwater. These are not abstract numbers on a spreadsheet. These are our neighbors, our family members, our friends. And let us not forget the renters who were promised that building more supply would eventually make housing more affordable. They are still paying astronomical rents while watching empty condos multiply across the city. The disconnect between the supply that was built and the housing that people actually need has never been more glaring. We built luxury condos for investors while families struggled to find three-bedroom apartments they could afford. We built towers in already congested areas while neglecting the missing middle housing that could have revitalized older neighborhoods. The priorities were completely backwards, and now we are living with the consequences. The federal government deserves its share of blame, too. Immigration policy was set at the national level, with little regard for whether receiving communities had the infrastructure and housing to accommodate rapid population growth. When provinces and municipalities raised concerns, they were largely ignored. The assumption in Ottawa seemed to be that the private market would somehow figure it out. Just bring in the people, and housing will magically appear. That assumption was always naive, and its failure is now plain for everyone to see. Looking ahead, there are a few possible scenarios for how this plays out. The most optimistic case is that interest rates come down significantly over the next year or two, which would reduce carrying costs for investors and make mortgages more affordable for buyers. Combined with some stabilization in the economy and population growth, this could gradually restore balance to the market without a catastrophic crash. Prices might drift lower for a while, but the adjustment would be manageable. The more pessimistic case is that we are entering a prolonged downturn that will take years to work through. If the economy weakens further, if unemployment rises, if population growth continues to slow, and if confidence in the housing market remains shaken, we could see prices fall by 20, 30, or even 40% in some segments. The condo market, in particular, could see severe distress as over-leveraged investors are forced to sell into a market with few buyers. This scenario would cause significant pain across the economy and could trigger a broader recession in Ontario. The truth is probably somewhere in between these extremes, but even a moderate adjustment is going to be difficult for many people. The era of easy money in Ontario real estate is over. The assumption that prices only go up has been shattered, and the officials who spent years dismissing concerns about market sustainability are now scrambling to respond to a crisis they did not see coming. What should you take away from all of this? First, be very cautious about major financial decisions in this environment. Whether you are thinking about buying, selling, or investing in Ontario real estate, understand that the market is in flux and the risks are higher than they have been in a long time. Get good advice from people who are not trying to sell you something. Look at the numbers carefully, and do not assume that the patterns of the past decade will continue into the future. Second, pay attention to what policymakers do next. The decisions made over the coming months and years will shape the housing market for a generation, whether it is changes to immigration policy, interest rate decisions, new housing programs, or responses to the current oversupply. These choices matter. Make your voice heard. Vote for representatives who understand the complexity of housing policy and are willing to make tough decisions. Third, remember that housing markets are cyclical. What goes up eventually comes down, and what goes down eventually recovers. This is not the end of the world. It is an adjustment, a painful one for many, but an adjustment nonetheless. The people who keep their heads, avoid panic decisions, and position themselves wisely will come out of this period in good shape. The people who deny reality, hold on to unrealistic expectations, or take on too much risk are the ones who will get hurt. Ontario's housing situation is a cautionary tale about what happens when governments, investors, and communities all buy into the same unsustainable narrative. Everyone convinced themselves that demand would never stop growing, that prices would never seriously decline, and that building more condos was the answer to every housing problem. Now that narrative has collided with reality, and reality always wins in the end. The coming years will be challenging for Ontario. There is no quick fix for the situation we find ourselves in. But there is an opportunity here too, an opportunity to rethink our approach to housing, to build the kinds of homes that people actually need, and to create communities that are more sustainable and affordable in the long run. Whether we seize that opportunity or squander it remains to be seen. Thank you so much for watching this video all the way to the end. If you found this valuable, please take a moment to hit the like button, drop a comment below with your thoughts on Ontario's housing market, and subscribe to the channel if you have not already. Your support makes a huge difference and helps us keep bringing you these in-depth analyses. I will see you in the next one.